so I wanted to get together with Marquez. He is with Trinity Financial Services, and I use me with my customers that need some help with credit. Let me see if I can-
I'd like to see if I can see you.
Yeah,
Okay.
sounds good.
Alright.
You never know when you try to do things live, what's going to go down.
Absolutely.
So yes, I wanted to partner with Marquez and really have him kind of go into credit, what that looks like, how can we help you fix your credit. Don't be scared of the number. You're going to have to find out what it is eventually and work on your credit.
Absolutely.
So I think that's super important because with his help, I'm able to get more people into homes, and that's the whole goal.
Mhm.
Hey, Jamie. Hey, listen, does it sound like there's water running in the background? I don't know, my mic was messed up or something. Let me know if you guys can hear us okay.
Yep, give us a thumbs up if we're coming in okay.
Yeah. So, okay. Hopefully everything sounds great. So listen, while we're doing the live, if you guys have any questions, please shoot them in the comments. We'll try to get to as many of those as we can in the live. If not, we will go back and answer each comment, one by one. And at the end of this video, I do want, yes, fine. Thank you.
Thank you.
And then when we get done, I'm going to add his information either in the comments or the description. So if you guys have any questions or need some help with credit repair, he will literally go down. He sat with me and really kind of just went over, like, what does it look like? What are the parts? Each part is an equal percentage of the 100 that you need, so he's been fantastic and a great resource to share with my customers. So please welcome Marquez.
Hello, everybody. Marquez Jackson with Trinity Financial Solutions. I am so excited to be joining Miss Melissa Cruz. She's an amazing realtor who has been helping people in the greater St. Augustine area. Also working with, I know Duval County,
Yes.
other surrounding areas as
Compost
well.
is the big one right
Absolutely.
now. Yeah.
Absolutely. So we are here live, guys, on Facebook, just to do kind of a Q&A session about how that process basically works for in that home buying process, from the credit aspect to working with realtors. So fire away, guys. There's no question that's off limits. That's why we want to be here.
It sounds a little fuzzy.
Sounds a little fuzzy?
A little fuzzy.
Okay, hold
My
on.
mom just jumped on, so she'll tell me the real deal.
Okay.
She'll tell me.
Awesome.
Look at
And I'm
my
going to
God.
try to go connect live as well, so
Oh, because
maybe we
you're
can
not
have
both.
double screen.
Yeah, both students. Mom, can you hear me? Hey, Fred. I'll give it a little longer. If you guys, if you're having a hard time hearing, just let me know, and I'll go ahead and plug in the headphones and we'll talk on the mic. But thank you for those of you that have joined us so far. You can jump on live on his phone just in case.
Back up.
Yeah, backup plan.
All right.
So yeah, if you guys have any questions, you can fire away, let us know. Water running. Okay, sounds great. Thanks, Mom. Hold that thought. All right. Does that sound better? It'll probably sound better on your phone too, on your end.
All right, let's see.
Okay, perfect. She said it sounds better. So we'll just
Sounds
kind of
better?
share the
Okay.
mic as we, yeah.
Awesome.
So yeah, guys, so fire away if you guys have any questions. Hey, Jimmy, let us know. But I'll let Marquez kind of jump in and talk a little bit about credit and what that looks like. And surprisingly enough, if you guys do not know, right now for you to buy a home, lenders are going as low as 580 for a credit score. It's not just the number, though. There's other things that are included in that. But at least you know if you're around a 580, maybe a 600, let's definitely have a conversation because it's totally doable to get you into a home and probably within 6 months. Most times there's things on your credit that you had no idea is on there. Information is wrong, and just cleaning some of that stuff up, I mean, will shoot your score up by itself, not even talking about the stuff that you have that you want to fix on there. So
Correct.
I will hand this over to Marquez so he can get started. Let me see. I can still hear you just fine. Okay, perfect. Thank you.
Okay, excellent. Thank you guys again. This is Marquez Jackson with Trinity Financial Solutions, joining everybody live on Facebook on a terrific Tuesday. Hey, everybody. So, let's talk specifically about the credit process. So a lot of people don't realize that 3-digit number that's called your FICO score, that is such an important number. And I can tell you this, when I started out, at the age of 18 when I got my first credit card. I remember Circuit City, I believe it was one of my first. I know we're dating ourselves a little bit here.
Yeah, listen, my first one was an Express credit card. So.
Oh gosh.
Hello.
So remembering when I got my first credit cards, I think Sears. That was one of my first.
That was a huge one. Yes.
I'll never forget. I was in Regency Square Mall. Up in Jacksonville, and had just turned 18, and of course they used to sit right outside in the center of the mall.
Oh, yeah.
And they had their tables out there, so people that came by, and they knew about the time that people were graduating from high school and everything. Right. So they were sitting out there, and they say, "Hey, did you want to fill out an application for a credit card?" And I said, "Well, sure, let's go ahead."
I'm 18 now.
Yeah, I'm 18. I didn't think anything about it, and so thus began my journey of getting into debt. And not really understanding how credit cards worked or any of that stuff.
Right.
And so I'm so passionate really about wanting to get financial literacy pushed into our school systems.
Right.
So I think that is such an important topic for us to talk about tonight.
I mean, for me, for a while, I was like, why do they even have credit cards? The system's trying to mess with me on purpose.
Exactly.
Totally the wrong attitude.
Yeah.
But I'm learning. I've grown from that comment.
Absolutely. But credit is a good thing. Credit is a good thing, guys. We just have to learn how to manage credit responsibly. And I think that's one of the biggest pieces that we're trying to make sure that we share with everybody. They said the audio is a little hard to hear. Okay, guys, hang on 1 minute, okay? Stand by. All right. We got to fix. Hold on.
We're good. We'll get it figured out.
We're
Thanks for hanging in there.
Through our technical difficulties.
Yeah, it'll be all right.
Sorry. All right.
We will not be stopped.
We will not be stopped. This is important information everybody needs to know about.
Yes.
So, hey, guys. Tiffany, Santana, Corey, how you guys doing tonight? Miss Selena, how are you? I wonder if it's our signal in the building.
Maybe.
Okay, let's see. Hold on. Okay, guys, are we still rolling good? Okay.
It might have frozen. Yeah, hit finish. Yeah.
Let's see if we can continue.
I can hear you clearly. Okay, thanks, Mom.
Okay, you can hear clear? Okay, thank you. All right, I'm going to get back on.
Yeah, so I always thought, because I started getting, I will just kind of jump in. I started getting credit cards too when I was 18. And it's a lot of fun. You don't think about racking up all that debt. And, you're like, oh, I'll pay it off one day. I'll get there eventually. And then you're like thousands of dollars in. And you're like, how did this happen to me? And then you're just stuck. And then I'm thinking, the system is setting me up to fail. Like you're telling me to get this credit card. I don't want the credit card. But for me to buy a house or buy a car, or you have to have that credit. So it's so frustrating. And I'm in my 30s. So imagine some of these kids are in their, early 20s and 25. Like we have got to help them figure this out, guys. Like I feel like it is our responsibility to help the kids coming behind us learn about financial freedom and credit, and then they can teach their children.
Because we asked that question, who does credit impact?
Right.
Everybody, guys.
Everybody.
Everybody. So let's talk about that just for a minute. I'm going to try take 2 on my phone, guys. Sorry about that. Bear with me 1 minute.
Hey, Rachel.
Hello there. Okay. We're going to try this again live. Take 2. Okay. Guys, give me a thumbs up if you all can hear me okay on this screen over here. Give me a thumbs up if you can hear me okay, please.
Yeah, my mom said you could hear us clearly. You're not frozen. Okay, perfect.
Okay, great. All right, guys. So let's talk about the actual FICO score, the way it works. The FICO score actually ranges from 300 to 850, where 300 is as low as you can go and 850 is a perfect score. There's actually only a handful of people that are walking around with an 850 perfect credit score anyway. So credit is actually broken into several different levels, ranging from poor all the way to exceptional credit, okay? So the challenge for some people is they say, I hear all the time, hey, Marquez, can you tell me exactly, how is my credit score calculated? Because I really want to know how does it work. So grab your pen and paper, guys, because we're going to break that down actually tonight, so everybody will know exactly how your credit score is calculated, okay? So I know this one's not doing right over here.
Yeah.
We're going to look at this one up here for now. All right, guys. So your FICO score is broken into 5 parts. So I'm going to go over them in order from largest to smallest. So everybody, I hope you got your pen and paper. Get ready to rock and roll, because you're getting ready to know how exactly your credit score is calculated. So
and before he jumps in, for
I'm
those
ready.
of you that when we get done, you would love, you want to get some more information or maybe have a one-on-one because you don't want to share like all your personal stuff, just let us know.
Absolutely.
And we'll get you hooked up together.
Absolutely. Thanks, Melissa. So the largest part of your FICO score is actually your payment history. Payment history makes up 35% of your credit score. Now, in that 35%, what a lot of people don't realize is every single month when you're making those reporting payments, so it doesn't matter if it's a credit card, it could be for a car loan, personal loan, even on a mortgage. When you guys are making your payments, it's reporting every single month, good or bad. The most weight on payment history, though, is actually between 18 and 24 months. So the older it is, it actually impacts your credit a little bit less, but it still hurts if you make a late payment, okay? So that's very noteworthy. Make sure you guys jot that down.
Yeah, because I would have thought inquiries or your debt to income, like what your utilization of your cars would have more of an impact, but
yes.
Payment history, how crazy is that?
But let's
Who
think
would've
about
known?
this for a minute, guys. What exactly is a credit score anyway? What is a credit score? That 3-digit number is actually a risk indicator. So what really the lender is trying to see is, hey, if I've got this money that I'm going to lend you, what is the possibility that I'm going to get my money back?
Right.
So particularly from a bank or a credit union, any lender that's going to lend somebody money to buy a house, they're saying, wait a minute, this is it's probably the biggest purchase that you're going to make, right?
Absolutely.
So if we're going to lend this money, we need to know what is the risk factor associated with lending this money to this particular buyer. So obviously, the higher the score, that indicates that, yes, it's a better chance that they'll get their money back. Now, let's talk reality. You have people with a high credit score that run into challenges and default on a loan. True or false?
True.
Absolutely true. You have people with a low credit score that wind up buying a house and then become excellent customers for the bank. They pay their bills on time, and situations change. What's the point? The point is it's a predictor, but a credit score is not anything finality to it, okay? So it's just the risk factor that a lending institution will use to determine if they can actually, feel like they can make that loan based on their parameters. Now, here's something you guys need to know. This is a nugget you guys can put in your pocket. So Melissa asked again, why is payment history so important? Guys, if you make one late payment in the algorithm, it's basically like taking away 3 good payments. Let me say that again. If you make one late payment, it basically is like erasing 3 good payments.
How crazy, right?
Wow.
Oh, we're going to get into that.
Wow.
Yes, because we talked about that before. So thanks for that question.
Yes, great question.
We will cover
Justine.
that.
Great question. Definitely want to get that.
Yes.
So the other thing that we want to look at is the second largest portion of your FICO score is actually going to be credit utilization. Okay, 30% of your credit score calculation is utilization of your credit. Now, what I run into when I do consults with a lot of my clients is we sit down and we start looking at the parts of their score. And one of the things that pops up for many of my clients is they don't have any data that's reporting for credit card utilization.
Right.
Wow. So guys, you're missing out on a huge chunk of your score if you don't have any kind of revolving credit utilization. Why?
Right.
Because remember, with credit, that's one of the pieces of your credit score is the institutions want to see can you pay back things
Right.
on time? That's number one, 35%. But also, they want to see you using credit and then paying it down. Using credit, paying it down, because that's showing responsibility. So therefore, if people say, well, no, I'm just going to live on cash. Cash is king. Well, here's the thing. Cash may be king, but credit is so powerful.
Yes.
It is so powerful. So think about this, guys. When it comes down to your credit card, ideally we recommend to our clients probably be better to have 3 to 4. And you say, well, why would I have 3 to 4 instead of just 1?
Right.
Well, think about this. If you had $1,000 on your credit card and all of a sudden there was an emergency that happened, do refrigerators break? Yes.
Yes.
Do your cars
ACs.
break down sometimes? Yes. AC goes up. Oh my gosh. It goes on and on, guys. It's called life. It's
Right.
going to happen, right? So here's the thing. You know they always told you never put your eggs what?
In one basket.
Never put them in one basket. Never put your eggs in one credit card either, guys, okay? So here's the point. If there is a situation that comes along and all of a sudden you have to rack up a lot of credit on that one credit card, guess what you're getting ready to do to that one credit card? You're getting ready to max it out.
Yeah.
Understand this. The closer you approach certain thresholds in your credit card spending, it triggers different things in utilization. Therefore, utilization can increase or lower your credit score. Let me say that again. The more you start using credit, that's a good thing. But if you go above certain points, certain thresholds, it actually can lower your credit score. Because what now they're saying is, this person is getting ready to start maxing out their credit, so their risk is greater that they may not pay back other pieces around them.
Right. And it can only be, I mean, you could be hurting yourself over just $1,000 or $500. Like if you get a credit card and they're like, hey, it's
Yes.
your first one, we can only give you $500 and you max that out. It's just as bad as spending like 10 grand on a credit card. It's just as bad.
Correct. So you've really got to watch that. Now, I will tell you this. If you're going to apply for different credit cards, and I'll get into this in just a minute, but if you're going to apply for different credit cards, it's better to apply for those different credit cards at one time. It's better
Yes.
to apply for them at
So
one
sad you say
time.
that. And could I add store credit cards?
Here's the thing, guys.
Because I know-
I'm so glad you brought
Yes,
that up.
Macy's will get you. I'm telling
So
you.
here's a question for you. Is it better to get a store credit card or a generic credit card with a Visa or MasterCard logo? Which one do you guys think? Come on, Facebook audience. We need you to talk to us, guys. Is it better to get a store credit card? Because, hey, they're going to save you 20% at the register. I mean, this is awesome.
Yes.
Or is it better to get like a card that has Visa or MasterCard on it? We'll wait. No, I'm just teasing, guys. So here's the thing. Let me ask you this question. Can you take that store credit card to Publix and buy groceries with it?
Probably not.
Can you take that store credit card and go get plane tickets with it?
Nope. No miles either.
Nope, no miles. So here's the point, guys. If you get a store credit card, where can you use it? Where can you use it? You're exactly right, Josephine. Good answer. If you get that store card, where can you use it?
Just at
Only
store.
at the store.
Yeah, there's no
Exactly.
real benefit to that.
Exactly.
What was the other question? She
So-
said, "Oh, why open at one time?" This actually ties well with real estate because if you're gonna buy a home and get a pre-qualification, that will last you, give you a window of maybe 30 to 45 days, depending on which lender you're working with, and you can have your credit checked during that time, and it
Correct,
only
Victor.
affects it the one time. Now, if you go if you didn't find a home or you changed your mind, and then 6 months later or 3 months later decided, hey, we want to buy a house, it will be another ding on your credit at that point because you've already went outside that window.
Exactly. That's
Yeah, they
gonna
do
be
give you a
another
grace
part.
period,
Yes,
yeah.
that's going to be another part in the credit score calculation. We'll talk.
I love Old Navy now.
Oh, I love that, Jamie. So, look, we're not hating on store cards. Let me make that clear. We're not hating on store
I mean,
cards.
Old Navy does hook you up though. I'll give you that, Jamie.
I
Old
hear
Navy
you.
hooks you up.
But you just got to consider, if I get this store credit, like jewelry stores, for example. A lot of people like certain jewelry stores, and they get a credit card specifically at that jewelry store, guys, right? So here's the thing. You just have to keep in mind, if I buy, if I decide to get that credit card at that store, understand you can only use it at that store, and you cannot use it anywhere else. Now, here's the crazy part. All of that counts towards your utilization.
Right. And their interest rates are ridiculously high.
They're usually higher.
I mean,
Yes.
that's another topic, but
Yeah, they're usually higher. So just bear that in mind, right? All right, so here's the other thing, guys. When we talk about utilization, you have to remember credit utilization doesn't just look at one card. So let's say a person has 3 credit cards, right? All right, here's the example I'm going to give you. So let's say card number 1, let's say Old Navy. Since you like that store, I got you. We're going to make Old Navy the first credit card you have. And let's say Old Navy has a $500 credit limit that you got there. Go shop and happy, right? The second card that you get is through your credit union, okay? You get a credit card through your credit union, and it's got a $1,000 credit limit, okay? And then let's say you go get a American Express card, and that American Express card has a $1,500 credit limit on it, okay? So now, let's talk about that. If you were to look at all 3 of those cards and add them together, what is your spending power that you have? Again, an Old Navy card, $500. You got a credit union card that's $1,000, and then you got American Express that's got an $1,500 credit limit on it. So what is your total credit utilization that you have? Well, if you add all those up, you've got $3,000 in credit that you can use. Are y'all with me so far? So let's think about this. One of the things I want you guys to remember, your credit utilization for all of your cards combined, you want to keep that beneath 30%. Okay? So let me say that again. All the cards combined, however much credit that you're using, you want to keep that combined total under 30. Now, here is a key, guys. This is a good nugget. If you really want to max out your score, each individual card, you want to keep it under 9%.
Wow.
Let me say that again. And it doesn't matter how many cards you have. It doesn't matter. You could have 5 cards. But each individual card, guys, I would keep it under what? Keep each card under 9%. Okay? Is this helpful so far, guys? If this is helpful, guys,
Mary.
drop us some 1s on the Facebook Live, guys, if this is helpful information Melissa and I are sharing with you guys today. All right. So now, let's talk about the third largest piece of your credit score calculation. The third largest piece is going to be the age of your credit, okay? The age of your credit. That's 15% of your total FICO score. Now, somebody says, well, why is that important? Here's a mistake that we run into in both of our industries all the time. If somebody's getting ready to buy a house, guys, if somebody is getting ready to buy a house, and all of a sudden they go and they start closing old accounts because they say, oh, I am not using this card anymore, I'm going to close it out. You saw what Melissa just did. Oh.
I'm like, please call me first and say, hey, I'm thinking about doing this. Is that a good idea?
Right.
No, please
No.
call me. I'll help you.
No, don't.
Don't
no,
do it.
Don't do it. Don't do it. We run into that all the time, where people wind up really messing up their credit score because they close out old accounts. That just totally tanks their score. So even if you have an Old Navy card, now I know the person who posted, they really love Jamie loves Old Navy, so she's gonna always use a card. But let's say you have a store card or any credit card that you're really not using anymore, right? And so you say, I'm really not using this card, so therefore.
Oh, Navy cut her off. Oh no. I mean, that's kind of good though.
Yes.
You can get a different one.
and I'm glad you brought that up, Jamie, because I'm going to also hit on that point.
Yeah, I forgot that happens.
Yes. So here's the thing. If you have all of your credit accounts that you have, you do not want to close old credit accounts, because the way that they look at the age of your credit, the way that they come up with that 15%, is they're going to take all of your accounts, they're going to put them in order of how long you've had them, and divide them by the number of accounts that you have them. So let's say you have a card that you've had for like 15 years, right? A lot of people do, right? If you have a really old account, you close that out, guess what you just did to the age of your account? You just lowered the age, didn't you?
Yeah, drastically.
And you also cut off the number of accounts that you had
Right.
by 1. So not only did you drop your years, you also dropped your denominator. So now your 15% is getting ready to plummet as
Right.
far as that part of your credit score.
Right.
So I'm glad Jamie brought up, what about an account that I'm not using? And this is what I tell my clients as well. Listen, if you have a card that you're really not using, keep it active, right?
Yeah.
So let's say it's a Target store card, for example, right? Go to Target, buy the cheapest thing you can find, put it on the card. It keeps it what? Active.
Even if you get gas or groceries,
Yeah.
something small that you know the
Correct.
next month you can pay it completely off.
Absolutely.
That'll keep the card active. You won't have to pay interest on it.
Correct.
And yeah.
So guys, here's your tip. If you buy a stick of gum, I'm not trying to be funny, but
Right, seriously,
buy a
something.
stick of gum or something you know you're
Yeah.
going to use, like
Well, yeah.
T-shirts or whatever.
Yeah.
Put that on the store card, and now it's showing activity.
Right.
So every 6 months, just make sure that you make a purchase on it.
Right.
Does that make
Yeah,
sense,
because
guys?
I mean, I used to work in retail, and they don't tell you like, "Hey, we're about to close your card." If you know, they just close it. I mean, the place I worked at, I think after a year, they just cut you off. They're like, "You didn't use it, we'll close it."
Yep.
And I mean, and then you have no idea.
Correct. Now, let's think about like cards like Home Depot, Lowe's. A lot of times, I know people will buy those kind of cards for projects they're working on. Guys, it's the same thing. You're not using it for a while, and you don't want that. Hey, having at least.
No, I think
A lot of times I tell my clients, hey, listen, there's 2 things that you're always going to buy every month. What are the 2 things you're going to buy every month?
food and gas.
There you go, Melissa. You're going to
Food
buy
and
gas and groceries every single month, right? Now, I usually tell my clients, I do not recommend going out and buying groceries with your credit card, because people tend to gravitate towards those BOGO sales. Oh my gosh. Like, I've got to buy like 18 boxes of cereal and, I don't know, 20 rolls of paper towels or whatever, right? So here's the thing, guys. When it comes to actually looking at that aspect, you always just want to make sure when you're using your credit, just use it once every 6 months. But when it comes to gas, hey, you're only going to put so much gas in your tank, right? So you don't have to worry about overfilling it and all these other things. Groceries, I do not recommend buying groceries with a credit card.
Yeah.
Okay. So that's 15% of that. Okay.
We good again?
Oh, we were freezing a little bit. Okay, are we good?
Are we good again?
Uh-oh, are we unfrozen? I feel like this right now.
I know, because usually we freeze on
Yeah.
our end too.
Correct.
So maybe we're back.
All right. I don't know. Guys, if we are unfrozen, can you send us a quick
Thumbs up.
Let us know we're still rolling good.
Trial and error, baby.
There we
All
go. All right. So we're gonna keep rolling, guys. We're gonna keep rolling. So the next part.
We're good.
We're good. Okay.
Thank you.
Thank you so much, Jane. So the 4th component of your credit score is called the credit mix. A credit mix. that is 10% of your credit score. So what they're looking at there is the more different types of credit that you have, i.e., do you have revolving credit? Do you have installment loans that you've taken out? Do you have student loans, a car, a mortgage? Okay? All of those.
She's such an here to answer to Jamie's question. Hold on.
Uh-oh. I'm sorry, we missed a question up there.
Oh, no, we did. Yeah, I thought your credit cards don't like you.
Okay, I'll back up 1 second.
Yeah.
Yeah, so I think we're unfrozen now. So, yeah, to the question about the zero balance, understand this. You're getting credit in your credit score for using credit. So it's usually better to keep a small balance on your accounts rather than zeroing them out. Because remember, with utilization, they want to see you using it. Charge it up, pay it down. Charge it up, pay it down. Because that shows that you are using it responsibly.
Right.
The other thing is a lot of times you'll see your credit card companies extend you more credit when they see that you're using it responsibly. If that makes sense, guys. So yeah, if you
Oh, I
leave it,
love those days because they don't tell you that either. I'll get an
Yeah.
email. We just raised your credit limit. I'm like, yes, my score's about to go up.
correct.
That is literally the first thing I think when they're like, hey, we raised your credit. I'm like, yes, my score's about to go up like 5 points.
So that's a good thing. You know, the more you use it and pay it down, that actually shows that you're being
Hey,
responsible.
Renee. Hey, Tracy.
Hi, guys.
Hey, Molly.
Great questions, guys. Thank you so much. Keep the questions rolling. So,
Oh, all righty.
all right, no worries. So now we were on the fourth part.
Yes.
We were talking about credit mix. So what they're looking for is, do you have diversity in your credit profile? So the best thing you can have on there, of course, is history that you've had a mortgage at some point,
Right.
and you were paying on time with it, right?
Even a car.
yes.
Yeah,
car is
even
the
a car.
second best
Now,
thing.
when you buy it, you'll see your credit your credit will go down maybe a
little bit.
month or two, a little bit, and then you'll see it jump up a lot more. It's just like when you get a mortgage. That's why I tell people, once you get your credit fixed and we get you into the house, the odds of your credit tanking like that again I think is lower
Yeah.
than you not having a mortgage, because the mortgage is such a huge part of your credit. It
Correct.
just really brings your score up, and you don't want to default on that loan, so you're paying your stuff on time. So it's a
Correct.
huge deal.
Because what you're showing, remember, when you have a mortgage, is that is a huge responsibility. So you're showing that lender that I can make these kinds of payments and make them on time.
Right.
So that is huge. That is really huge. So that counts as an installment loan. So that goes under payment history. And remember, it also helps you in the age of your credit.
Right.
And also what? In the type of credit, that 10% there. So now let's talk about the last 10%. And somebody asked about this earlier, Melissa. So I told you we were coming back to it. The last 10% is inquiries or new credit. Okay?
Oh, yes. We do.
That's 10% of your credit score. Now, here's the thing. Anytime you go home shopping, okay, and you guys, I know, you guys are ready to buy a house now. I know you're ready. You're super excited. You're ready to go. So here's the thing. When you start home shopping, do your lending in the 30-day window, because they can count that as one inquiry
Right.
instead of multiple ones. I think probably the most inquiries I've seen, I had a client that I was consulting with. I think theirs was like I want to say it was like maybe 60 inquiries that they had. 60 to 70 inquiries, which meant somebody kept pulling their credit over and over. So you just have to really watch that. Same thing, guys, if you're trying to buy a car. You have to be really careful when that particular dealer or whoever you're trying to get the loan from is trying to get you approved. Make sure, guys, to do your shopping within a short window of time.
Right.
So that you're not getting hit with all these inquiries. Now,
Right.
somebody may argue, Melissa, and say, well, it's only 10%. It's not a huge thing on my score. Guys, don't miss this. Don't miss this. There are people with very good credit that get turned down, and the number one reason they get turned down is because they got a good credit score, but too many inquiries. You've been trying to get too much credit in a
Right.
short amount of time, and you can have an automatic denial possibly.
Right.
So you really, really, really have to watch that.
Well,
guys.
and I know some people, and the answer to your question, Mom, yes. I know some people that have their credit locked because I know car dealerships are a big one that they're like, yeah, we'll run your credit, and you're like, okay, great. And then, I mean, I've had it happen to friends, friends of mine. It's like, I mean, double digits,
Danger.
over 50
Danger.
inquiries, and
Yes.
it's like, what were they thinking?
Yeah.
Yeah, it's like, check it the one time. I know people that have their credit locked, so you have to give them permission to unlock it to even check your credit. Is that something that, I mean, people
It'd be
can
worthwhile
benefit?
to do.
Yeah. Okay.
Now, the one thing I'll tell you a lot of times too, it's better to go ahead and get pre-approved before you get to the car lot. That way, if you get pre-approved before you get to the car lot, they're not shopping and sending your credit all over the
Right.
place.
So all over the place. Yes, that is. Hello.
Just think about doing that already. So, hey, do your shopping on, maybe your credit union or different particular lenders. Do your homework, find out what their rates are, talk to them, and then do all of that homework before you get there. So when you do the poll, you're already comfortable with that particular
Right.
lender. Just a suggestion.
Right.
Yep.
And then I don't know. We should jump over to Credit Karma World. Credit Karma World.
I don't know. Is this class ready for credit card? I don't know. We may have to do that in a whole separate podcast.
A whole separate conversation.
But how are we doing on time, guys? All
You
right.
guys good?
All right. Let's see. Yep, that was the credit
Yeah,
lock
the credit
question.
lock.
Yep.
Yeah.
So,
Oh, she had asked about the rentals because I know we talked about that before.
yes.
Adding your rental payment onto your credit so that can be shown.
Correct. So, great Credit Karma question. We're going to come back to that, Jamie. Hold that.
They do, but don't do it at the car dealership because they're sending it to whoever will answer and listen to shoot them a whatever you need back, an approval. If you go somewhere that's
Like a bank or a
yeah
credit union?
more secure, I guess,
Yeah.
and you can just do it the one time.
Correct.
Because these guys are checking your credit and not even asking you or saying, hey, I sent it to 50 places.
Correct. You can walk into that car
Right.
dealer and say, hey, your financing is your financing, okay? So understand that they're going to try to get you to buy from that particular car lot and go usually through their particular car's financing.
Right.
So just be wary of that, guys. I'm not saying don't go through the car dealer, but just be mindful and do your shopping around of what are your interest rates, find out the terms
Right.
before they do a single pull.
Right.
On
Because
your
you
credit.
never know if later down the say you don't buy there 30 or 45 days later, they're like, hey, well, let me check again because if I can get them a good deal, they'll check it, not tell you, and then call you and say, hey, I got you a great deal. They just dinged you again, and it's already been past 30 days.
Correct. Every time an inquiry is done, remember, it drops your score
Yeah.
a few points at a time. So you can see how if you get enough inquiries, that can really start to tank your score
Right.
eventually. Yeah.
Yeah.
Absolutely.
So Credit Karma, it's not that they're 100% inaccurate. It's just it's a more consumer side than lending or financial.
So let me
whatever.
speak to that point.
I don't have the right words.
No, you're good, Melissa. So actually, Credit Karma is actually very accurate. They're very accurate in the way that they update. Here's where a lot of people that I run into with my clients, they don't understand it. There are two major types of credit score models, okay? Two major type of credit score models. One of those is something called the FICO score, okay? So if you're getting ready to go buy a house, a car, try to get a credit card, 90% probably or more of lenders are going to pull which score? Your FICO score, right? Now, the other scoring model is called the Vantage Score 3.0, okay? That is AKA Credit Karma, okay? So if you ever go on Credit Karma and look and scroll, it's going to tell you this is powered by what? Vantage Score 3.0 or calculated by Vantage Score 3.0. That is the scoring model that Credit Karma uses. So that Vantage Score is very accurate. But your Vantage Score and your FICO score are not the same
No.
because they're not calculated the same way.
Listen, guys, this happens all the time. I'll have
All the
buyers
time.
like, "Hey, my credit is this," and they go to the lender, and sometimes it's like a 60-point difference. Sometimes it's huge.
Oh, absolutely.
Yeah.
We get people to say, okay, I'm ready. I just got my credit score, and I check with the lender, and they
Right.
say my score is all that I need, so I am good to go.
Right.
They sit down with the lender. They've unfortunately didn't have the right information, they share with their realtor. So they
Right.
try to get to the lending table and they get a big fat denial.
Right. Yeah, because
Oh
listen,
my
lenders
gosh.
can go down as far as 580. And if you're around on Credit Karma, the 600, 620, and they go to do a pull, I mean, it could
Mm-hmm.
pull you below that 580, you know, because you weren't sure. I mean, I
Right.
have Credit Karma. I see what's on my credit. I mean, I do check it on annual, but I don't go by their score. You know, it's just
Mm-hmm. Right.
I can see stuff that's on my credit and
So which one should you look at? Great question. So a lot of times I will do a consultation with my clients from their Credit Karma information. Because again, that information is accurate. It lets me know the areas that we need to work on with our clients. And then we can begin working with our clients through credit restoration. And then I can also give them different recommendations depending on their specific situation. So a lot of times I'll use Credit Karma as a springboard process to helping my clients get to a better place with their
Right.
credit and consult with them. And then our company is actually the one that does the actual credit restoration for them.
Right.
But I do the consultation for my clients. So
I would focus more on your FICO than your credit.
yeah, so here's the
Yeah.
thing. You need to know what your FICO score is. You can actually go to myfico.com. You will have to pay for it. And then you could actually find out what your credit scores are. You can see your whole credit report. That is a monthly membership, so I don't recommend keeping that going.
Right.
Here's the one thing I'll say. I would only pay for that report if you were like really close to the buying process.
Right.
If not, guys, give me a call. Hit me up on email or Facebook, guys. Give me a call. Let's sit down. We'll do a free consultation, and then let's find out exactly where you are before you have to pay that. I think it's about $30 a month.
Right.
Or that's the
You know,
lowest
and
level they've got.
somebody, I can't remember who told this to me, and it was a long time ago, because I do, every January is when I remember to check my credit, and I'll get from all 3 credit bureaus.
Yes.
Every year I do it. And this one particular person was like, well, you have 3 credit bureaus, so check one in January, maybe mid-year, the other credit bureau, the second one, check it then, and then in December, check the last one, you know, kind of spread them out throughout
Kinda
the
spread them
year,
out,
because
yeah.
if things get added throughout the year
Correct.
that you weren't sure of, at least it gives you a chance to check it and get those things corrected.
100%.
And
Yeah.
then, and it gives you 3 times throughout the year instead of just once.
Correct. Yeah, you can
Yeah.
actually go and get a free credit report from each of them, Experian, Equifax, and TransUnion. You can get a free credit report from, there's a lot of places that'll offer you a
Right.
free credit report. Now, will it give you the FICO score?
No, that you have to pay for.
Yeah, you have to pay for that. But it will tell you what's on your credit report. Now, here's another thing. If you get denied for credit, you actually have the ability to get a copy of your free credit report to find out why was I, because they're going to send you a letter and say you've been denied.
I think we
Then-
should say that one more time.
Yeah.
Because I don't think people know that.
So if you get denied for credit, okay, and they'll usually send you a letter to say, I'm sorry, you were denied for credit. Go ahead at that time and get a copy of your credit report, okay? You can get one at no extra cost at that time if you're denied, but you have to ask for it. And a lot of people don't know that, okay?
Right.
Kind of like when you go to a restaurant and there are free things that they offer you, but you never knew that they would give this to you because
Right.
you don't know to ask for it.
Right.
Does that make sense, guys? So, I do want to stress that Credit Karma is accurate, but it's a different scoring model.
Yeah.
It is a different scoring model. So you just have to make sure that you understand what you're looking at.
Right. It's a great guidance, for sure,
It's
yeah.
great guidance, but don't use your Credit Karma score to try to walk in and buy a house from Melissa. That's not going to work out very
Right.
well for you, okay? But there are options. Now, I do want to go back up because somebody asked a question earlier about your rental payments.
Oh, yes.
Your rental payments. A lot of people in this country right now are renting.
Right.
Okay. For various reasons. Okay. But some people are renting because of their credit, and they're not to a place where they can buy a house, but they really, really want to buy a house. So understand this, guys. Our company actually has a program that's very popular that we offer to renters where you can actually get your rent added to your credit report. So that can certainly increase your credit score just by doing what you're doing right now.
Right.
Paying
Making
your rent
on-time
what?
payments.
On time anyway.
Yeah.
Does that make sense, guys? So it's a very inexpensive program. Give me a call. I'll be glad to share more information about that. just to try to give you a boost in that area for your credit score. Because
Right.
guess what? You're already paying your rent anyway, so
Right.
why not use that to help your credit score, right?
Right.
Why not use that? And we can go as far back as 2 years and give you credit for paying on time. So that's pretty nice.
crazy.
Yeah, that's phenomenal.
Yeah.
That is phenomenal. So, guys, has this information been helpful so far tonight?
Do you guys have any other questions? Maybe something we didn't touch or talk about?
All right, we're trying to see if there's any more questions out there.
So yeah, listen, I was just talking to somebody about this the other day because we're approaching tax season, and I'm
Yes.
like, I wish people, if they would, like, save that money and use that as a down, because sometimes you have the credit, you just don't have the cash, like,
Yeah.
and that will help you kind of get you jump started. And we didn't even talk about, different loan programs. I can get you with a lender to talk about, because every person's situation is different. So I can get you I work with a ton of lenders that offer multiple different programs, so we can see, do you fit into something? And if you don't fit, what can we do to help you to get you to fit in that box that you need to fit
Absolutely.
into? So,
Absolutely. There was something else that I did want to touch on, and that is a lot of people come out of the holidays and they have charged up their credit accounts by spending money during the holidays because they want to get gifts for other people. We see this every single year, guys. I was just talking with one of my clients, and we were talking about the services and getting started, and she mentioned, that she ran up her credit. So right now she's not able to get started with the credit restoration, but she really wants to buy a house. Guys, when you go into the holiday season, it is so critical to set a budget. Before you start buying the very first
Right.
Christmas item or whatever it is, guys, make a budget to make sure that you don't go into debt really for the holidays.
right. I
okay?
even saw somebody online, I think I saw it posted on Facebook, every time you get paid or even once a month, whatever you can afford, get like a $25 gift card all throughout the year, so that by the time you get to Christmas, you have all the money on gift cards that you can buy, and you don't have to worry about putting not $1 on your credit card.
Yep.
That I thought was such a great idea.
Yeah. Yeah.
I mean,
don't-
20
yeah,
bucks
don't go
here and
into
there.
debt, guys.
Don't go into
debt.
debt. I mean,
Oh
20
my
bucks here
gosh.
and there to set, you could save a lot of money throughout the year.
I love that. I love that, Jay. That is awesome.
No, you
no,
cannot use a
unfortunately
credit
not.
card.
not
No,
for
no.
down payment. No. Mm-mm.
There is assistance out there. I know in St. Johns County, if you're on a certain side of the tracks or 95, there's USDA financing and they can give you 100%, but that comes
Yes.
with guidelines and requirements of that, limitations to
income.
that too. Yeah, so there's definitely lots of possibilities, tons of different options, and if you guys want some more information, like I said, I'm gonna add his information, his contact info, either in the comments of the video or in the description when we get done. That way
Absolutely.
you guys can contact him directly. And if you need to chat with me, I think I should say this now, I guess now that I have you guys live. I love working with buyers. It's what I'm passionate about. I figured that out like halfway through last year. I was like, you know what? I just really love working with buyers because I just love getting to
very
help
special.
people, changing their lives, making those memories. It doesn't cost you to use me. I am not paid by the buyer. I don't charge a fee. My brokerage does not charge a fee. So please use and abuse me. Ask me questions. Let me help you achieve homeownership.
Don't
This
abuse
is
her too
what
bad now, but you
not too bad. But this is what I do every
Yeah.
day, and the more people I can help, I just couldn't ask for anything else. Like
Yes.
it's so exciting. So
It is.
yeah.
Here's another nugget, guys, for you. Because we are in January right now, this is the perfect time of year to start looking at your credit. Because when do you run into a lot of buyers, Melissa? What time of year, probably?
Now tax
Yep,
season.
Yep. And a lot of people start saying, I want to buy a house, but a lot of times they want to move in the summertime, right?
Yeah.
So
With school, yeah, if they have kids in school,
yeah,
yeah.
because they have kids. So I say that because this is the right time of year to start working on your credit, guys.
Mm-hmm.
If you say, hey, I already know, Marquez, my credit is way jacked up, we can still help you guys. It doesn't matter how bad it is.
Yeah.
We can help you.
You just have to start.
yeah,
you just
gotta
have to start somewhere.
You gotta start somewhere.
You can't be worse off if
No.
you start working on it. I mean,
No.
it's only going to go up, so it can't hurt you. I remember the first time that I even thought to care about checking my credit, And there were so many things on it that I was like, none of this is mine. It was insane. I had different names, address. I'm like, I've never even lived there. Where'd they get this? Like, I sent so many dispute letters to each credit bureau to fix it. That's why ever since then, every single year I check it, because
Correct.
something's always being added or being done. And I'm like, I want to make sure my credit's, because it's going to hurt your credit.
Correct. Understand that all of us have legal rights. And because of the law, we have the ability to dispute an accurate, unverifiable, obsolete,
Oh,
or
I know what we have to say.
erroneous
One more.
items on your credit report. Yes.
Every time I'm with this guy, I learn something. But the very first time, because let's talk about collections. Because
Sure.
he talked about,
Oh, my
listen,
goodness gracious.
light bulb moment, guys.
Okay.
If you have something in collections in your credit report, I thought I had to pay that back. Can we shed some light? Not necessarily.
So let me ask you guys a question. Okay.
My credit is jacked up.
Let me ask you guys a question. If your account has already gone to collections, is that already going to hurt your credit? Guys,
Yes.
give me a response there. If that account has already gone to collections, has that already hurt your credit? What do you guys think? Yes or no? So here's the thing. If it's already gone to collections, it's already hit your credit, it's already dropped your credit score, right? Exactly. It's already hurt your credit. So let me ask you guys a question. If you repay that debt that has gone to collection now, let me be very clear, it's already gone through the collection process, is that going to automatically increase your credit score? Is that going to automatically increase your credit score? What do you guys think?
Guys, this is insane. I'm like so excited for the mic drop right now.
Here's the thing. If you go ahead and pay ABC Collection Company back, it will not automatically come off of your credit. It will not automatically improve your credit. Why? Because here's the simple truth, guys. When you went to the hospital, okay? Thank you, guys. Great answers. You are absolutely correct, guys. When you went to a local hospital, sends it to ABC Collection Company, right? When ABC Collection Company gets the debt, they're going to buy that debt from the hospital for pennies on the dollar. Oh, did y'all hear the mic drop just then?
Oh,
okay.
my
So here's
goodness.
the thing. Let's say, for example, you owed $2,000 at the hospital. It goes to collections. Do you think the collection company, I like ABC, do you think ABC Collection Company is going to pay $2,000 for your debt? Absolutely not.
I thought so.
Absolutely not. They're going to pay pennies on the dollar, and they're going to send you a bill for $2,000, and they say, hey, guys, you owe us. Wow. Here's the thing. Did you ever have an account with ABC Collection Company? No. You had a debt with who?
The doctor.
Hospital. But what they're going to do is they're going to say, listen, guys, I know you owe us $2,000 at ABC Collection Company. We're going to work with you. Oh, I'm
Ooh,
sorry.
that word
if there are
settlement?
and I know if there are some debt collectors listening, I'm sorry. I'm going to make you mad. I'm sorry. But I got to tell the truth. They're going to say, listen, guys, we're going to make you a deal. We're going to make you a deal. We're going to work with you. Just give us $1,000 and we'll wipe out your debt. Guys, they're still making a ton of money.
And
at
it's put on your credit
$1,000.
report as a settlement instead of paying off the balance.
Correct.
in
Here's the thing,
full.
guys. Is that automatically going to come off your credit? No. So what am I telling you? You have some legal options. Call me. Call me, guys. Let's talk about those options that
Yeah.
you have, okay?
Now, I will say, because sometimes, like, I've tried to reach out on my own to dispute, and I don't have much luck with the collections part of that. So that's where Marquez and his company and the company he works with can take over and send professional letters. I mean, send the stuff
Correct.
to reach out to them because they're going to listen to what these guys have to say and help you get that taken off. So instead of being stressed out about paying $2,000, you just got the whole thing taken off. And I would also say too, you know, I've had things on my credit that I've paid off. I make sure to call because I want to make sure that they take it off. So I call and say, hey, this debt has been paid within 30 days. I want this off my credit, paid off the credit, like altogether, because sometimes they don't do that.
So here's the thing, guys. You got to understand this. If you pay the collection company the money, is there an incentive for them to take it off of your report? They don't care.
Yeah.
I mean, I hate to say that, but
They
they don't
don't.
because they want the money.
Yeah.
What happens to your credit? Your credit's already been tore up at that point, right? So it's not, they really are indifferent. I should say indifferent is probably better. They're really indifferent about whether that comes off of your credit report at that point. So understand you have options. Did Marquez Jackson get on here and say, don't pay your past due debts? I never
No.
said that. I said you have options.
Yes. Just
Call
call.
me.
Call. Ask.
Text me, guys. Email
yeah.
me, okay?
Call, text, email. We're here to help you.
Yeah.
It's early in the year. If you guys are looking to buy a home, I would love to help you. If you guys need help with your credit, Marquez is the guy to call to get you to where you need to be.
Absolutely, guys.
I'm pulling stuff.
Ah, cool. So my number, guys, get your pen and paper, and Melissa's going to drop it in there as well.
Yeah.
904-900-0785. You can reach me at that number. You can also email me at 740creditking@gmail.com.
Oh yeah.
Again, that's 740creditking@gmail.com. Or I am on Facebook if you want to reach out to me as well. And so is Trinity Financial Solutions,
Yeah.
guys.
So
Here we
Marquez
go.
shared something at the end of the year last year that I thought was really, really great.
Oh, yeah.
So I asked him. I took some notes. So I'm going to have him share it again. And it's 6 steps for you to learn financial freedom. It technically says young adults, but this could be used. These 6 steps could be used for everybody. So
Absolutely.
look for that on Facebook. I'll share his post into my page so you guys can see that. Or if you want me to email you or mail it to you or whatever, just let me know.
Oh, okay. Phone number again. It's 904-900-0785.
I thought it said PH Rum.
Yeah, we have to look at that
PH Rum.
again.
And I'm like, what? What kind of drink is that? No.
Oh my goodness gracious. So understand this, guys. You can text me at that number too, and we can set up a consult where we can help you. So yeah, this is 6 great tips, guys. I love that post that was shared back in, I think it was like October of last
Yeah.
year. So so these are the 6 things, guys. Get some pen and paper. Write this down. This is 6 steps to learn financial freedom, guys. This is going to be life-changing for so many people, guys. Number 1, create a budget. That is so, so important. Create a budget. And I'm going to add to that, stick to your budget, okay? Create a budget. Number 2,
supposed to say build.
make sure that you build. Number 2, make sure you build an emergency fund. That is so important, guys, because is the rainy day coming? You want to make sure emergency funds. Also, when you get to your house, it's going to help you get to. You want to make sure that you have an emergency fund set aside because stuff is going to happen, right? Number 3, this goes back into what we said earlier in the credit score calculation. Number 3, pay your bills. What, guys?
On time.
And I'll add to that. Go ahead and auto pay if you need to, so that way it'll stay on time. Number 4, use your credit wisely. So that talks about the credit utilization that we mentioned earlier, right? So keep it under what? 30%, but the target is to keep each card under 9%. All right, awesome, guys. Number 5 is you want to make sure that as you're getting paid on your job, that you're setting aside money to contribute to a Roth IRA, your company's 401k. Those of you that work in education, do a 403b. Whatever that is, make sure that you're putting some money into investments, guys, okay? Number 6, this is probably the most important.
The most.
Are you ready, guys? Number 6, live within your means. True story, guys. When my wife and I bought our very first home, we were so excited. And what we didn't realize at that time is we bought at the top of our price range, guys. Oh, my gosh. And here's the thing. Life happened. Life happened.
Listen, people think I'm crazy because I will have this
No.
conversation. I have this conversation with every single buyer. And I know it sounds crazy, but I'm like, listen, Life is going to throw you curveballs, and if you guys cannot afford this mortgage on one paycheck, if it's a couple, whatever, then don't buy the house. I mean, we can
Correct.
look for something a little bit cheaper because life is going to happen.
Correct.
Curveballs are going to come, and you're not going to be ready for it because that is just how fun life is sometimes.
And the bank is going to ask for that money.
Yes, and they want
month
their
after
money.
month. Yeah, it's not really an option.
And
So-
even like, with the 15-year loans or the 30-year, even if you can afford the 15-year, do the 30-year. You get the lower monthly payment, and then you can pay extra on it to get it paid down quicker anyway.
Correct. Just because it says it's a 30-year loan doesn't mean you got to take 30 years to pay it off. Right,
Yeah,
guys?
you can do 15 or 30, but if at 15 that brings you to the top of your what your monthly fee is, go ahead, go into a 30. It'll lower your monthly payment because if something happens, at least you know you weren't at the top.
And you can always double up.
Yeah, and you can always double the
always double
payment.
up.
Exactly. Yeah.
Yep. Exactly. Do not set yourself up for failure.
Yes.
You're exactly right. 100%
Yeah. Learn how to
correct.
say no. No.
Yeah, learn how to say no.
Oh,
All right,
well,
guys.
thanks, guys. I hope this was helpful. Like I said, I'll have this information on here. If you guys have any other questions, you know how to reach me. I'm not hard to find. And just give Marquez a call or give me a call or whatever, and then we'll get together.
All right, guys.
All
Thank
right.
you all so much for tuning into the
Yeah,
session
thank
tonight.
you.
Credit Talk with Realty with the amazing Melissa Cruz. Marquez Jackson with Trinity Financial Solutions.
It's late, guys.
It's late, guys. I'm sorry. My tongue's getting tied. It's been great, guys, being here tonight. You all asked wonderful questions. Thank you for being a great audience, guys. We'll see you next time.
Thanks, guys.
Thank
have a
you.
good night.
Have a blessed night.